You are listening to Mining Stock Education.
Welcome to Mining Stock Education. My name is Brian Lenny. Today with me I have André Gaumond, the former CEO of Virginia Gold Mines, which made the Éléonore discovery back in 2004. Éléonore was later sold to Goldcorp, and along with the sale of the royalty to Osisko Gold Royalties in Virginia 2.0. André, it's an absolute pleasure to have you on the show. For newbies in the resource sector, your face may not be familiar, but for those of us that were participating in the last cycle, we are certainly familiar with your success. And I thought we'd start off by you giving us a background about yourself and what led up to that discovery of Éléonore.
Yes, thank you, Brian, and very happy to be with you here this morning. My background, first, when I was young, I always wanted to become a geologist. I started to collect rock when I was very young. So, when I made my application to university, I made my application in geology and geological engineering. So there's nothing else that I wanted to become or to do than geology. I worked, after school, I worked as a geologist in exploration for different companies in Rwanda, and eventually had an offer to become a mining analyst. So I jumped on that opportunity because for me it was really going back to school to learn about the financial network, how juniors are run, and what are the points, the items that a shareholder is looking into a mining company to invest in. All these things, were very, very good for me in terms of my formation and in terms of going forward to eventually start my own company. After being an analyst mining analyst for 3 years, I had an offer to join a mining group. So I was vice president of a company. I was a director, general manager of another one. So that 3 years, because it lasted 3 years, helped me to learn about boards, how to write press releases, accounting, all the things that you don't really learn when you're, learning about geology, how to run a junior mining company. So when I was in university, I created a little mining fund with friends, just to know how stock trades, stock exchange, public company, the stock exchange, So all that because I wanted eventually to create my own company. So after being a mining analyst, after being inside a junior mining company and doing promotion and we discovered two deposits when I was part of the group, when I was the general manager as well as a vice president. After I did that, then at 32 years old, I had a long discussion with my wife, and I decided to start my own junior called Virginia. So it started very, very small. I called one of the broker that I like very much, and I asked him $100,000, and he said, André, okay, but at a condition that you take one of my share, a company that is inactive called Virginia Gaumond. So I said, okay, I had a shell, but he offered me another one. So I reorganized the shell with $100,000. And I said to my wife, if I don't raise more money within 3 months, we're going to be bankrupt. So in 3 months, we raised another, I think, 150,000. And then I said, okay, I have 9 months in front of me anyway. So then I raised another $300,000. So, one financing after the other, we were able to develop slowly but surely a junior explorer in Quebec. Now, I started very, very small, and I was alone, so I needed to grow. And in the first year of existence, I was traveling from Quebec City, where I live, to Montreal, which is the financial center in Quebec, to go and meet with brokers. And during the 3 hours drive, every morning and every night, I was asking myself, how can I increase my chances of a discovery? And I was, thinking about different things. Should I associate myself with a major mining company that will finance myself for the next 10 years? Blah, blah, blah. And then I realized that I was not asking myself the right question. The right question was not, how can I increase my chance of a discovery, but should be, how should I reduce my risk of exploration? Because increase my chance is something that you can control. You cannot control your chance. but reducing the risk of exploration, now you have actions that you can control yourself. And if you reduce the risk of exploration, automatically you're going to increase your chance of a discovery. So I decided to define my exploration strategy in 5 points. And in my career, which lasted 23 years, I've never went away from these 5 points, which I took time to define. To be honest with you, it took me a few months to define these 5 points very, very precisely. And these 5 points are focus. Focus means not be spread into 3 continents, because if you spread in 3 continents, it's gonna be very hard to become an expert on 3 places at the same time, especially if you are a small junior company. So you really have to focus, and eventually, because you focus over a long period of time, you become the best explorer of that territory. And to become the best explorer and the best team of a specific territory was definitively one of my most important goals. So I decided to focus in an area called James Bay. James Bay, if I put that in a map, it's in northern Quebec. It's 600 kilometers in length by 600 kilometers in width. So it's pretty large territory, 600 kilometers by 600 kilometers. If you try to find a deposit, which is 10 meters wide, within 600 kilometers by 600, you have to turn a lot of rocks. So that was the territory, that was the focus. Then my second point was to have the best exploration team in the province of Quebec, which means expertise. So again, if you focus on an area, you reduce your risk of exploration, because you get learned the territory, and you are the best and best and best, and eventually you eliminate the bad spots, and then you get excited about the hot spots, and what are the hot spots. And so focus is, by focusing, you reduce your risk. By being the best exploration team, so expertise, having the best expertise, you reduce your exploration risk. So I had, at the time, a competitor his name was Paul Archio. He was working for the SOCEM, the state company of Quebec, SOCEM. It was owned by the Quebec government. And he was my main competitor, staking the same areas in James Bay. So I approached him and I asked him if he would be interested to become my vice president. And he said yes. So from that day, instead of having my worst enemy as a competitor, I had my best friend as a partner. And together, we built the team. Now, I have also to tell you that we did interesting things, such as I went and did, if I can call it, strategic alliances with 3 universities in the province of Quebec. So I became very, very close to teachers. So what I was asking them and giving them, because it was a win-win, I was asking them to give me the name of their best students every year. So you have the best students for different teachers from 3 universities. At the end of the day, you have a list of very good students. And then what you do is you hire them during the summertime. You pay for their tuition fees of their university for the 3 or 4 years of their university. And obviously, you develop a loyalty. They know the team. If you find that the person, she or he, is a good teammate, go well, get along with a team, and go in the field and hardworking and bright and wants to learn, then you hire them after the school for forever. And in exchange, I was proposing the teacher to, if they want to do master degree or PhD degree on my property, I would pay for everything. So for them, they were able to get students that would do PhDs and master degrees, and I would pay for the salary, I would pay for the camp, I would pay for the tin sections, I would pay for everything. Mm-hmm. So for the teacher, it was good, and for me, it was good. So that's how we build the team, slowly but surely getting the best talents in Quebec. And again, that was very important because I figured out that if I would get the best team, it would reduce my risk of exploration. Then my third point is very, very important in my strategy is partnership. Once you generate a project, you go in an area, you start from scratch, you find showings, and then you find shared zones and alteration, and then you see that you have showings over certain structure, and then you stake the entire belt, because that was the beauty of James Bay. There was nobody, particularly nobody, and there were volcanic belts there. So we went there and we were staking the entire belt. We saw that the belt had the potential, we were staking the entire belt. So we have belts of 25 kilometers in strike length and belts of 80 kilometers in strike length. And we were staking each one of them. When you knock at the door of a major mining company and you show them showings, with the showings, you show them a model, a geological model. So one of the things that we realized very rapidly is that for a major mining company, sometimes if a chief geologist or a vice president of exploration, this vice president of exploration will have to sell your project to their boss if they want to get involved. And to make it easy to sell to their boss, you need to find a model that everybody knows in this world that would fit with your property. The Musselwhite model, when you have an iron formation with gold within an iron formation. The EMLO model, if you have a sediment hosted with gold in it. It could be an Olympic dam. It could be a model in Boddington in Australia. It could be a deposit in South Africa. It could be Kirkland Lake model. Whatever. That doesn't. It's not important. But of course, you don't invent stories. You need to prove that your environment has lots of similarities with such mine models. And when you put that all together with mineralized zone, obviously you need some showings or boulders or border fields, boulders at grade 43 grams, and you don't have one, you have 200 of them. Now, not always 43 grams, it could be 2 to 40 grams. But you have something exciting. You are after something that could become a deposit. So once you have that, then I had a tendency to bring a partner very, very rapidly. When I say very rapidly, it's not totally true. I needed to spend 1, 2, 3 summers on the property before I got to the level that I knew that now it's a kind of a feeling, but with the experience, you become pretty good at judging when it's time to bring a partner. Mm-hmm. And then you ask a partner to spend the next $6 million, $5 million, $4 million if it's more risky, $12 million if it's less risky, and you already have economical intersection that surface, something like that it's more sexy and sexy. So we did that. I think I signed during my career 70 deals with majors and intermediate producers. Wow. So 70 deals means millions of dollars that are spent by partners on your property. That means many things. That means that they finance your team, they spend the money, the exploration money, which are the risky money to develop the project. So they take the risk. Every time you sign a $5 million deal with a major, The next $5 million that will be spent on the property is spent by the major. Now, your risk is zero. Your risk is zero now for the next 5 years on that property. Zero. So and when you have 2, 3, 4, 5, 7 deals like that, imagine you have 7 properties worked by majors. They pay for your team. You keep a 10 to 15 management fees because you are the operator. Some year, as a junior explorer, I was a profitable junior explorer company because of the management fees, Or I would make $1 million of management fees or two, and I would spend that to generate new projects. So my cost was zero. So I remember when we, after the Brick scandal in 1999, gold was at 250. There was no financing. It was the tech bubble. So there was no finance. The junior were dead. The mining industry was dead. And 90% of my budget was financed by my partners, So Virginia was able to go through these tough period what I call crossing the desert. It was very tough because of our partnerships. And we did that for years. So partnership was very key to our exploration strategy. And I always kept a 50% interest. Now, that was something that was a deal breaker for me. It was very hard to negotiate because when I was negotiating deals with them, I was saying, we have 100%, you're going to earn a 50%, and then we'll see. I don't want to give you how much I will sell the other 50%, but I'm a seller. I don't want to put any money into production. So I tell you right away, you're going to be able to buy 100% of the property. No doubt about it. I will keep a royalty. The other 50% will be for sale, but I don't want to put the price right now. So let's work it together, and then we'll decide what is the price to buy the other 50%. So it went very well. So the partnership for me, extremely, extremely important. And there's another point that I should point out. We have management meeting with Placer Dome, Barrick, Homestake, Goldcorp, Agnico Eagle, name it, companies from Europe, companies from Australia, companies from South Africa, Goldfield. All these companies have their own expertise. When you do a management committee meeting with them, they say, oh, by the way, and then they visit your property. And they say, oh, by the way, I saw that. I saw that alteration in shots areas, in Australia, in Papua New Guinea, and then we were noting, of course, all these examples that were fitting to our geology. We went in the nomenclature and all the books, to get the description of that specific deposit and try how did they find that deposit. So my point is, by having so many partners, we learn from them. We learn from them and apply that knowledge to our own territory. So obviously, year after year after year, if you do that year after year after year, you become really, really the best explorer of that territory. And the word was spread in the industry. If you want to do business in James Bay, you associate yourself with Virginia Gaumond. That's it, that's all. So it became, over time, easier and easier to get partners, because if they would become interested about the project that we were showing to them, they would say, okay. And they would trust us as an operator because of the reputation we earn as the expertise, as for our expertise. So itself, sustain itself. It self-sustain, self-feed itself. Now, the third point, a part of our strategy, so I said focus, I said expertise, partnerships to reduce the risk. The third point was diversification. Diversification means I cannot bet on one property. I was always saying to my geologists and my team, we will stake as many good projects as we can have. So the number is not important. The quality is important. So, and part of our exploration, when we were doing brainstorming every year, 3 days of brainstorming 2 times per year. And we were inviting many university teachers and really the good brain on nickel, good brain on copper, good brain on the diamonds, whatever, in these brainstorming. But for every budget I had, I was saying to my team, 70%, 65 to 70% of the budget will go on the properties we have already created. But 30% needs to go on generating new ones. Also, what we were doing, if after 2-3 years a property, we found that we may stay there for a while, but it doesn't have. We don't feel that it's gonna be easy to find something there. It takes time and money, and we don't have so much time and so much money. So my point was that we also eliminated many properties after 2 or 3 years of exploration, but we were replacing them by new ones continuously. And so usually we were dropping 3 properties, 2 or 3 per year, and we were staking 4 or 5 new ones. So the portfolio was turning, and it was increasing. And by having more and more partners, it was increasing, and the budget was increasing. So altogether, it was a very active company, and we had to hire new people. The students that I told you that we paid the tuitions, so the team was going. So diversification was also part of it, because also I have also to tell you that 70% of my budget was focused on gold, 30% on base metal. But when gold was at 250, my driving properties were base metals. For a few years, all the budget was going on nickel, copper, nickel, cobalt, platinum, palladium, all these type of material, of commodities, because gold was not the flavor of the year. So during a few years, we lived on base metals. So it was good that we already had base metal properties in our portfolio. It was very good, because after BRICS, when gold went down, we surfed on base metal project. And the 5th point that defined the strategy was long-term presence on the territory. Long-term presence on the territory means 2 things. A, cash. You need to have cash. So cash means that for the first years, I accumulated my cash position to a certain point. I was spending millions of dollars, but I was raising a little bit more than I was spending. And once I reached $10 million in the bank, I said to myself, that was my goal, by the way, I said to myself, I will never go below $10 million, because if we find something, or if we don't have any money in the bank, and now you're negotiating with Placido, and they know that you have no money in the bank, they know that you won't be greedy, you will have to do a deal, so they can negotiate you down on the property. But if you have $10 million or 5, let's say before we had 10 million, we had 5 million or 6. The day you have cash in the bank, if you don't meet our requirements, or there was some negotiation, obviously it's normal, but there was a price below which I would say, no, forget it, I'm keeping it, I'm gonna go myself. I have the money. That helped me to negotiate equal to equal with the major ones and the intermediate mining. So cash was also king. And it also helped you, if ever you find something, to be aggressive. If you find something, then you could You put one drill, two drills, three drills. Whoa, then you you are aggressive because you have the money. And when you put two drills, what do? You raise money because you have three drills running, and then you raise money at this. So, and the B point of a long-term presence on the territory, and when you have cash, you can guarantee your shareholders that you will be there in 5 years from now. What I wanted to tell my shareholders is, no matter what, I will still be there in at least 5 years from now. That is important for a shareholder to invest in a junior that will not disappear or run out of money in the next 2 years. That is important to know that at least we have 5 years of money in front of us. So that was one of the, and the B point was, in terms of long-term presence, was social license. So I spent a lot of time at the beginning to develop my relationship with the First Nations, which were living on the territory, the Crees. And we became friends, really friends. And I was visiting every community, Cree community. At the beginning, they didn't trust me. They didn't trust the mining industry. In fact, some Taliban, the Taliban are the trappers, were telling me, my grandfather told me never trust a mining company. And I said to them, I will change that. I promise you, I will change that. Now, trust, you cannot buy trust. You have to earn it. And trust takes, to be part of a family or for a Cree to trust you, it takes time. And you have to have a conversation. You have to talk to them. So I invited them as a VI, I invited the trappers, the Taliban, the CTA, which is the Cree Trapper Association, the EDO, which is the Economic Development Officer, the chief, the vice president, the vice chief. I invited all of these people in my office in Quebec City when there was the Quebec Mining Conference. I paid for the hotel, paid for the transportation. And now I was telling them, look, I have been welcome in James Bay since I've been there. Now it's my turn to welcome you in Quebec City. And during the gala party, I was dancing with the wife of the chief, and he was dancing with my wife. My point is, I wanted to explain them, teach them what is the mining industry. So by visiting the mining conference with them, they became more and more sophisticated. They knew what was a drill. They knew what was a trench. They knew that was a geophysical surveys with an aircraft going over the territory. It's all about communication and teaching them. And they trust me so much that when somebody else were getting into James Bay, they were calling me, hey, André, there's some company that is cutting wood in that territory. Could you help us? And I said, yeah, and I think I know who they are. And then I was calling the company, hey, what are you doing? You're cutting trees and making trails in this area when you should call them before, identify yourself, talk to the tiny man, ask them if there's any streams or rivers that is very important for them because the trout are spawning there and they don't want to have gravels going in the spawning area. You should be a good citizen. Oh, hey, then they were surprised. Oh, we didn't know that we should do that. So I became kind of their ambassador throughout the mining industry, and they became my ambassadors throughout the Cree nations. So the first Taliban with whom I dealt with was telling the other Taliban, because the other Taliban was saying, you doing business with mining company. And he said, you know what? It's not that bad. It's not as bad as I thought. In fact, I trust them. I like them. and they hire my son, and they hire my nephew, and my wife is working for them, and I transport the barrel during the winter with a skidoo to their camp to make sure that they will have barrel of fuel for the summer camp, and I build a camp, and and during the Christmas time they pay me to keep that to keep that camp safe. So I go there, I do trapping, I'm lodged, I'm fed, and I'm paid, and I go that with my family. So they trust me to the point that I'm the guardian of their camp. So you see how it works. So it's little things that when you add them makes a huge difference. So I spent a lot of, so that was my fifth point, a long-term presence on the territory, defined by 2 points, cash and social license, access to territory. So these 5 points, I've never went away from these 5 points for 23 years. Always keep, because these, I think, was very, very important to discover deposit. Now, in James Bay, we discovered 6 or 7 deposits. For me, a discovery means resources, because we discovered tens of thousands showings, but showings are showings. For me, a discovery means a value. You have a resource, and so we discovered 5 gold deposit, 1 base metal, and another deposit, which was ilmenite and iron, and but only one became a mine. So my point by saying that is, I always say, with all the humility in the world, we deserve every deposit we discover, because we were there for years, and we were there when it was plus 30, when a billion mosquitoes and black flies were trying to suck your blood from you. And we were then at minus 30 when it was very cold in the winter to drill on lakes and in the forest, and we were there. So once you're on the ice, you have more chances to score gold, and once you score gold, you have many more chances to win the game. It's as simple as that. Now, luck is also part of that, because of the 6 or 7 discoveries we've made, only one of them became a mine. So Mother Nature needs to be on your side to eventually find a mine. Once you have discovered the deposit, you've done your job. Now it's Mother Nature that decides if that deposit will become a mine or not. And then you need a little bit of luck. Well, such is life. We know it's part of the business, and it's part. But our job was to find deposits. And now the other deposits that are not economical, I always say eventually they will become satellite deposit of something else. Right. If price of gold goes up, eventually somebody will build a mill and get this ore from these satellite deposit around, like in Val d'Or, like in Rouyn-Noranda. Once you've built a mill, all the small deposit went to the mill, because the infrastructure was built by somebody. And so these small deposits, it's just a question of time that eventually they will go to the mill, because they're there, and some of them are 15 grams, so you can transport them very far away, because you will lose 1 or 2 grams of transportation, and then it will still be 13 grams at the mill. So, and others are 1.5 grams, 8 million ton, not bad. But if you have another deposit nearby and you lose a 0.3 gram by transporting it, it will still be 1.2 gram to the mill. So anyway, eventually these deposits will become. We also find a base metal deposit called Coulon, which is actually the largest undeveloped copper, zinc, silver deposit in the province of Quebec. The largest. It's 15 million ton. And I'm sure, and I'm totally convinced that this will become a mine. And this is no doubt in my mind, just a question of time. And make sure that the price of base metal stays at a certain level, for a long period of time. Now copper is performing very well, so I'm pretty sure that eventually this will be put into production. Sometimes you need also help from the Quebec government that would say, okay, you put that mine into production, we will build the road. There's a 20 kilometers road from the main road to the mine. We will build it because that means, and the First Nation would like to have that road as well, and Hydro-Québec would like to have that road as well. So we will build that road because there's three stakeholder that wants that road to be built, and it will help three different groups. Hydro-Québec, the First Nation, and you by putting the mine into production. So sometimes you just need, something, a little help like that to put the mine into production. Now, Éléonore. And stop me because I'm
No,
if
I do have a question though, Andre. Looking at the landscape today, and you really were a pioneer when it comes to orchestrating these JV deals and that whole business model. It's definitely grown in the industry, but it's still very much a minority when it comes to exploration. When you look at the deals that are being made today, do you think that's a function of the major mining companies sort of learning from their experience in the past and wanting to structure a deal where they know exactly how they're going to gain ownership if they want to over that period of time of the deal? Do you think you'd be able to go in there and say, hey, I'm only going to give you 50% and we'll work out the other 50% at some point down the road?
I think that many other junior companies now have dealt with them by giving them the option to earn 70%. So when they will put different deals in front of their boss, they will have an opportunity to earn 70% on one property and 50% on another one. That may work. That may have today. It may work against us if we would stick with the 50%, depending on the quality of our project. Now, by telling them that we will sell our 50%, we don't want to put any money into production. We're not mining guys. We're explorationists. That could help. So if the quality of a project is good, they will still do the deal. If the quality of the project is equal to another one on which they could earn a 70%, they will strike a deal with the 70%. So which means that maybe if today I would try to repeat the same thing, I would probably, on some properties that are not superstars projects, I will probably give up a little bit more than 50%.
Okay.
To get the deal done. You see? So, but I would probably ask them to put a little bit more money. So at the end of the day, I'm still reducing my risk of exploration. And that's the goal, to reduce the risk of exploration. To give the shareholders, to give them as many lottery tickets as I can, without jeopardizing the future of the company, which means too much with too much dilution. Because now I explained you the exploration strategy, but part of the corporate strategy. The corporate strategy was defined in 2 points: limit the dilution, cash and limit the dilution, get as much cash as we can and limit the dilution, and the most important one was, we will never put any mine into production. This is not what we do, and we don't want to do that. And we explained that right at the beginning in front of any majors. We're not producers. We're not we're not mining company. We don't have the expertise. This is completely different. It's not because you're a doctor that you're a surgery doctor. Even if they are part of the same, it's saying the same thing. It's not because you're a geologist that you're mining. It's completely two different domains. So our world of expertise is exploration, and we will stick with that world of expertise. So we have no interest to become a producer, which means that our interest in any project will eventually be for sale. That's it. That's all. Now, the beauty of having a 50-50 joint ventures, if eventually we want to sell you 50, you can sell it to different partners. Not only the one that already owns 50%. You can sell it to a third party. If you own 70%, it's much harder to sell your 30% to a different partner. So that was the reason why we kept the 50% to force them to give us a little premium to buy the other 50. And that was just a negotiation point of view. You are you're stronger if you own 50% in your hands when it's time to negotiate. I think I answered your question about...
Absolutely. What about, so you're going to make the deal, and if I understand you correctly, prioritizing what's going to make up the deal is definitely correlated to the quality of the project. So
yes.
So when you say, okay, is it the amount of spend, is it the speed of spend, or the duration to make the major make a decision if they want to move forward? It's kind of it's a play on all of those things in relation to the quality of the project.
The answer is absolutely yes. If a property is not that obvious, you know that there's a potential, but it's not written in the sky. I may ask 7 million for the partner, to earn a 50%, but over 10 years.
Right.
You see, I will not force their hand. I will do what I would do myself. So for them, if I would do what I do myself, it just makes sense. It just makes sense. They will say, okay, it's 7 million over 10 years, but we can drop the property after 3 years if we don't like it. So what would be the expense after 3 years? It might be 2.5 million. It's not that bad. Or maybe it's only 2 million after 3 years. So it's not that bad. So we will give the project a shot. Or sometimes there's more geophysical surveys to be done before we go drilling. There's more tail sampling to be done before we go drilling. So we know we need to prepare the project to the drilling stage, put it into the drilling stage, and there's lots of expenditures to be done before that. And the major knows that. So we will do what is good for the project. Our goal is a discovery. It's the same goal than them. So why force them to spend too much money too rapidly if the project doesn't deserve it?
Right.
So we were applying to the amount of money and the number of years to spend the same logic than if it would be for us. So for the major, everything fits well. Everything, we were on the same wavelength. So it was much easier to negotiate and strike deals like that way. And the fact that our goal, and the fact that, some of the major knew that if they would they would become the operatorship, it would cost 2 times more money if they would be the operator than if they would let us work the property. So for them, to a certain point, they wanted us to work the project as long as we can, to bring it to a point, to a pre-feasibility study or feasibility study, where then they would take over. But the fact that we would be the operator, we knew the infrastructure, we would stay in camps that their geologists would not stay, necessarily, because it was a little bit more primitive camps. We knew the First Nations, we had a relationship, they had to, all these things, they would prefer us to be the operator,
right?
At least for the first year. So it was a win-win situation all the way. Win-win situation all the way. So it's just logic. It's just logic.
Let's talk, so you make the discovery of Éléonore, you eventually sell it to Goldcorp, and you take the royalty, as you were talking in your strategy, and you spin that out into Virginia 2.0, and you redo the same strategy, but you have this royalty on the side. that whole ramp up, if you look at, the later 2000s and getting into the early 2010s, we see a major spike in the gold price, and you've got that royalty that's certainly worth something. Especially at that time, I'm not exactly sure, looking back in my memory, what else would have been available, but that had to have been one of the best royalties available at the time. How do you make the decision when to sell?
It's a very good question. Every time it is a decision to sell is a good question, and it's not an easy one. And there's lots of feelings, experience, and intuition, if I can say that, intuition. But let's start with Éléonore. Let's start with Éléonore before Éléonore, which was Virginia 1. And then I'll tell you about Virginia 2, how I decided to. When we discovered Éléonore, we had false alert before. I had La Grande South was a very nice discovery. My last hole was 100 meters of, I don't recall, 2 grams, and people were telling me, André, you have a mine. I mean, you have a mine. It's open. And the next hole was nothing. It went from 100 meters at 2 grams to 0. So so in exploration, you have up and downs. So when we discovered Éléonore, I was very anxious that we would add a false alert. So we were drilling, and the deposit was going. So when I reached 1 million ounces, I said to myself, oh, this is good, but we still don't have a mine in James Bay. We need at least 1.5 million ounces. Then we got to the 1.5 million ounces. And then I said to my team, this is good. Now we have a mine. It will not be an easy mine, but we have a mine. Then my goal was 2 million ounces, and then we reached 2 million ounces. And then I said to myself, okay, now we have a very nice mine, but we also have a problem. We're getting into the area where we could become hostile takeover. So then I started to read all the deals that I thought were prospectus and all the deals that I thought would be relevant to my case since 1990, and I found a couple of examples of deals where you create a subsidiary. And it took me 9 months to study all these deals. And then I realized that I wanted also to have a tax-efficient transaction. And I realized the power of a royalty, which I didn't know that much before I read all these prospectuses. So by the time my stock went to between not the stock, but the resource inventory went from 2 million to 2.5 million ounces, I did all that research. And now at 2.5, I knew that I was getting into the danger zone. The red light, was flashing all around me. In fact, Placer Dome, when I reached 2.5 million ounces at 9.9% shares of my stock. It was very close to launch a hostile takeover on us. And it's because Barrick bought Placer Dome Canadian assets. Goldcorp bought Placer Dome Canadian assets, and Barrick bought Placer Dome International assets. So that transaction stopped Placer Dome to do the hostile takeover. But so my point, I discovered that after I sold to Goldcorp. I didn't know that at the time, but you can see that I was really in the danger zone. So then I said to my geologist, look, what we'll do is we'll put an auction forward. We'll sell Éléonore. In fact, we will not sell Éléonore. we will transfer all the assets we have in Virginia 1 into Virginia 2 as a dividend. We will isolate Éléonore in Virginia 1, and we will get shares. So by having shares of against shares of Virginia of a producer, we will have no tax impact until we sell the shares of Goldcorp. This is taxes, so I don't want to go there too. But I put forward a deal that was very tax efficient with no impact on the transaction, zero impact on the transaction. And it was zero impact on the transaction on a tax point of view until you sell the shares of Goldcorp which won the auction, and on Virginia 3, which we created. And when we were negotiating with the different companies, I said, this is what I want, shares, and we would create Virginia 2 and the royalty, no cap, and I remember at the finish line, there was two companies, Glamis and Goldcorp. And the deal, the offer was so equal that one day, because of the trading of their stock, Glamis was winning the deal, and the day after it was Goldcorp. It was so identical. And I chose Goldcorp because I thought that they will develop Éléonore rapidly. Now I made a mistake because Glamis took a takeover on Goldcorp 6 months after, which means that I would have had Goldcorp made the takeover on Glamis 6 months after. See, if I would have taken Glamis, I would have had a double dipping. I would have had the dipping of Glamis and the dipping, but I didn't know that, obviously. So that's a mistake I made, but it's you cannot know that, admit that. So then I created Virginia 2. Virginia 2, I said at the beginning and we sold Virginia 1 for $500 million. Okay, $515 million, some equivalent in US dollar and Canadian dollar. So, and I said to my geologists, we're going to sell the royalty we kept in Éléonore the same price we sold the entire deposit. And they said, are you crazy, André? And we sold eventually Virginia 2 for $505 million.
Wow.
To Osisko Gold Royalties. And because we ended up with Osisko, which sold their mine to Goldcorp at the time. No, they sold them to Agnico Eagle because Goldcorp made it hostile, but they lost the hostile takeover. So Agnico took over Osisko. They ended up with a very nice gold royalty on the Canadian Malartic, and we had a very nice gold royalty. We had among the two best gold royalties in the world, and they were in Quebec. So it was very natural to merge. So then I approached once they got their royalty, a month after, I called Sean and Brian and Bob Wares, and I said, why don't we sit together? We have the two best gold royalties in the world, and one is based in Quebec City, the other one is in Montreal. We're 2 hours drive from each other, and imagine if we would combine these two royalties together, we would be the fourth largest royalty player in the world. So obviously they were in my office the day after. And that's how it had. Now I had I was 55 years old, roughly. And when I sold Virginia 1, I didn't want to go golfing, and I asked my people, are you ready to start again? And they said yes. So now we also developed the Coulomb project, the base metal project during these years. So we added value to the company through that. And but the royalty was the key driver of Virginia to eventually sell it to Osisko Gold Royalties. And the timing was perfect on both sides. So timing is extremely important. Extremely important when it's time to do financing. Extremely important when it's time to do deals on the properties. Extremely important when it's time to do deals to sell your company. So timing is, I always say, one of the most important thing in life, to be at the right place at the right moment. And I always say to my kids, life presents you opportunities. You have to recognize them and seize them when life presents you opportunities. Because lots of people, they pass, they don't see the opportunity, or they're too greedy or whatever. No. You're not there for yourself. I was not there for myself. I was there for the shareholders. But is it good for the shareholders? If it's good for the shareholders, sign it. Do a deal. Do it. The shareholders are the ones who finance you since day one. They are the ones that you should think of and reward. And that's it. That's all. All my career was always focused on the shareholders. How can I reward them? Because they trusted me.
Absolutely. When your intent aligns in a positive direction, I think usually it does give you the vision to see those sorts of things. I wonder, do you believe in luck?
I have my own definition of luck. Luck for me is not you're circling a date on a calendar. It doesn't work like that. Luck for me is if you do the right thing over a long period of time. You don't know when, but luck will be at the rendezvous. Luck will be there. Luck will be at the rendezvous. The only thing is to give luck the time. You need to, so you cannot circle a date. You don't know when. But if you, over a long period of time, if you do the right thing, continuously do the right thing, for the shareholders, expertise, developing geology, etc., if you always, luck will be there. Luck will be at the rendezvous. But give luck time. Just give it. But that's my own definition of luck.
Éléonore was sold, it was last year to Dilmar, a UK-based but Indonesian-owned company. I've talked to a number of geos that do work up in James Bay, and they've said that they've heard that the right things are happening, that a number of dollars are being spent on drilling to expand not only at depth but in the surrounding. I was wondering if you kept up with that and have any opinion on where you see the direction.
I'm very glad that you're mentioning these comments because I heard exactly the same thing. And I talked to the chief geologist last fall, and he said that not only they found the ounces that they produce, but they found more now. They're doing very aggressive exploration campaign, the most aggressive exploration campaigns since, I don't know if it's the Virginia time or the Goldcorp time at the beginning, but since years and years and years, and they're finding. The deposit is still open at depth. And now they found a new zone, which is, by the way, close to surface. So now they're going to start from surface, go down to now, and they have, drift and shaft on different levels. So they'll be able to mine that new zone for a while, because now the shaft is at 1,200 meters, I think, below surface. And there was, I remember new boulders that we found that are north of the deposit. These boulders, Anyway, we found boulders that cannot come from the deposit. There's another source to the north. So there's probably other things around, that needs to be investigated. And I'm pretty sure nobody did that. Nobody explored the property. And the property was 545 square kilometers, if I recall. So it's a pretty big property. So if you start to explore around, and there was an open pit potential. I remember that right at surface nearby Éléonore. Open pit, 120 meters of a 1.12 grams stuff, that today would be economical.
Yeah.
So, I'm very pleased with that, and I'm sure that there's many more years. In fact, they have extended the tailings until 2032.
Wow.
which tells me a lot. And and they can extend it again.
Right. When you look at the landscape now, and you certainly have a great lens to view the market, are there any companies that you see on the exploration side of things that are doing the right things?
Oh, absolutely. Guys like Ken Olam, Zach Wood, is superstar, is doing very great all across Canada. Is very, very good. Project generator. This is the perfect definition of the project generator. Azimuth does the same thing in Quebec. Perfect definition. Midland. Oh no, these guys, Origin in Nevada. Very, very Paddy, very, very good geologist, and so there's lots of good group that does the right thing, the right thing, and they end up with royalties. So they're just new, small, very at the beginning, royalty holders, royalty companies at the end of the day, because they start with a project generator, sell the project, keep a royalty, and so on and so on and so on. And eventually they collect a nice group of royalties. And, land position, the world is becoming smaller and small. And land position is not something. Land position is everything. Mm. So if you own the land with a high, good quality of exploration, you eventually, you already have a very good asset. And if you can transform this asset into resources, that's key. And I'm pretty sure that we will see more and more of majors buying juniors, buying resources. We're starting to see that, but we will see more of that, and they will probably go a little bit down the food chain, which means they will buy the obvious plays now, but eventually they will buy, down a little bit more risky, or down the food chains of juniors, and you can see also that there's Santerra and Mitsubishi and companies that are taking 10% of this junior explorer, 10% of this one, 10% of this one. That's a sign. And to be honest with you, they do the right thing. I would do exactly the same thing if I would be in their basket, in their shoe, because buying 10% of the best group of explorers, you can't go wrong with that. You can't go wrong with that. You will eventually end up with resources, and eventually you might even end up with these guys part of your team if you buy them out.
Right.
Which is nothing wrong with buying good expertise.
No, absolutely not. Especially when people are such an important part, and probably even like you could arguably say at the exploration level, people are everything. As an investor, that's exactly what you are investing in. One last question for you: when you look at people, is there anything that stands out to you in terms of characteristics that identify that great leader or that great, VPX? What would stand out to you?
Boy, great leader and great VPX are two different kinds. So I would say two different description. Leader, I would say somebody that has a vision and care for the shareholders, and is not looking for short-term issue. Is really, when I say vision, means long-term. You're building something long-term. You're not trying to be rich. Within the next 3 years, the people are trying to be rich in 2 years. Forget it. They're not in the right. So visionary, like visionaire, like Brian Dalton, that built from scratch something, and he's a long term, and he has a vision, and he knows the business, and he cares for the shareholders. He cares for the shareholders. He wants to create values, and he thinks very deeply on every move he makes and limit the dilution. This is what you're looking for as a leader. Is the perfect recipe of talents, aptitude, to become a successful mom, and he is a successful mom, but a leader. Is the perfect definition of who is a leader. VPX is a little bit the same thing, but you have to add more things, like he has to be a rassembler, a leader, but a team man, somebody that is able to put the team together. He also has to be very, very good geologist, very, very good in terms of expertise, and surround himself with expertise. Now, surround himself with expertise is tricky, because lots of people, they don't want to hire somebody that will be better than him. And a real leader, a real VPX will surround himself with people that are better than him in different world of expertise. So it will be complementary to him. And a VPX might be even more a generalist, which will get the expertise of every other ones and put that together and be able to summarize that, So then it will see, sometimes a world of expertise, the tree hides you the forest. But when you are generous, you can see the forest, you can see the big picture, or you can see the potential, or you can see it's time to make a deal, it's time to bring somebody. So a VPX needs to be a team man, and somebody that expertise is important, but he surrounds himself with very good, sometimes people that are even better than him in geophysics, better than him in geochemistry. You see, in order to have the big picture and summarize all of that into a call. This is good, this is not good, we should keep on, you should acquire that, we should buy this guy, we should buy this company, we should follow him, we should stay besides him, because there's something there that that is good. So, or we should stake the entire this belt, because of such and such and such and such reasons. So why not?
André, it's been an absolute pleasure. Thank you so much for sharing your time and your thoughts. I hope we can do this again in the future.
A real pleasure for me as well. Merci, Brian.